Burberry now, iconic fashion brand, huge reputation known for its trench coats, check patterns, and high quality craftsmanship. Burberry's success in international markets, particularly in China, despite being a British brand, is a classic example of asymmetric internationalization. This phenomena has been studied extensively in academic literature and international business and marketing. One relevant academic source that jumps to mind is the work of Rugman and Verbeke, 2004, particularly their theory of regional international enterprises engaging with consumers on digital platforms and social media in a very effective way in China. And that aligned with academic research on international marketing strategies for luxury brands in emerging markets. They played it to the book and it emphasized the success of localizing your marketing efforts. This is something that Burberry are fantastic at doing while maintaining their brand consistency. Super important, and I'll put an academic reference below for those people who are interested in further reading from Fowl and Prendergast. Overall, Burberry's success in China and other international markets, despite its British origins, illustrates these dynamics of asymmetric internationalization, wherein these brands achieve disproportionate success abroad by leveraging the unique advantages and adapting their strategies to local market conditions. So for further references, check the description below. Lots of good extra reading there. I'm going to look at the chart now for Burberry. Monthly chart here, a strong, persistent downtrend. I'll stick me at the top. Index futures behind me. What a start we're making. So what you've got here is price action putting in a little bit of a dodgy turnaround, coming back down, losing the 236, going through the golden pocket and potentially coming all the way down to 786 or an 886 from prior low to high. That's being this important wick low itself was a test of a significant area. As you can see, it's had a number of hits here on the monthly, and this was 3 lows here from that low to this high. Here's your important 236. Going through that leaves it as resistance at $24. So that's one area to be aware of. Having gone through the golden pocket in the prior low, that support may well be resistance. So another area to be aware of. Yes, so 786, 886, $14, $12.70. These sort of targets if this continues. And as you can see, it's been relentless since then. 1, 2, 3, 4, 5, 6, 7, 8, about 9, 10 months in a row of extremely strong downtrend, mostly because of the large market available to Burberry in China whereas their small domestic market really isn't what contributes to that market cap, currently sitting at 5.4 billion. This is the long-term support level in at around $12 up to around 14. Anywhere there has been a good trade. The potential for price to break all the way back down to these sort of levels if it doesn't hold that target at $12. So I'll put in horizontal level in around these areas. Should it break this, and you'll be targeting price action coming all the way back down to less than $10 again, likely coming in and testing that level around 8, 750. Maybe even lower, right? So point being is we judge that entry should price get there, but you want your stop just beyond these previous lows. Should you be looking to enter this thing, right? Makes perfectly good sense then to manage your risk at that horizontal white line we've got on the charts, aiming for price action to move to the top side in a long trade. On the weekly time frame, you've got your RSI right down at the bottom of the bearish control zone. It's only been there twice. So it could push lower if it escapes out of the bearish control zone. Price action likely has tested higher. But in the meantime, in this horrible zone down here, speaks to the weakness in price action. That could very much speak to the likely test of around 1160, 1170. That sort of horizontal, trumping all other artifacts on the weekly time frame here. Has put in a higher high. Potentially could be a higher low with regards to this horizontal, but it's already exceeded the low in that sequence that gave you the higher high, so it doesn't look good. Daily time frame there, head and shoulders, measured move, price action exceeding what was even necessary, just to knock that on so you can see what was going on. One shoulder circles the head, another shoulder with a neckline running underneath, a little bit sloppy, and you had your measured move from this guy. Something approaching this, and price action broke down, exceeded that level and the prior low. While it is bullishly divergent and presenting a potential reversal here in price action, it's also got continuation divergence topside. We'll look for continuation as traders. Downward sloping diagonal resistance needs to get back above that on the daily time frame before you could even think about it putting in a bullish trend. So far, we're not seeing any of that. You have got a downward sloping channel here. Also drop that on. It's a weekly time frame, so it's worth mentioning. And if price continues to collapse, then I'd expect you to see tests of support on this guy. Doesn't need to be quite so dramatically thick, nor does any of these lines, to be honest with you. Now, you might be looking at that and thinking it's a little bit roughly drawn, and you'd be right. So really you're talking about the horizontal levels that are important in this 236 at 1750. That's an important level to break. Should you get back above that, chances are that you slow down or stop at $19-20, 382 downward sloping diagonal, and again at that point you'd be coming in and testing the idea of maybe even putting in higher highs, significant there on a macro picture. So if you manage to break 19 and 20, then the target is back up at 22.50 golden pocket retracement and the important horizontal that began the drop into this channel. So your targets to the top side are this downward sloping channel has to break. That may well be when price is coming down, testing these lower levels. In daily time frame, you can see interrupted rocky outcrop flash down at 8, so that's why you want to have your stop in close. 1750. Rocky outcrop flash, loads of opportunity begins at that level. You don't want to be holding this thing anywhere below 1140, 1170. You want to be managing your risk. Your entry as close to your stop as possible. So there's an entry potentially at that level, or you will want to have a stop then that exceeds these important lows here, 1360, and this downward sloping support line within the channel. That's beyond that where you'd want to stop, and you potentially want your entry in at around that 1458 if you're trying to take this and manage your capital protection. So when it goes into profit, you're following it with a stop. If that's not your strategy, you potentially want to wait for it to test that level at 1140, 1160, but with the stop in again, in full awareness of the potential for it to fall down to 8. So those are things to look to. I'd be very cautious about price action if it doesn't prove itself to the top side ahead of meeting those downward sloping targets, because it's currently bearish. It's in a bearish formation. You've got your momentum's got a bearish profile all the way down to the 4-hour time frame. The top side higher time frame is really, really tough looking for it to break above those support levels. support previously, now resistance. So you need to see some significant momentum on that move to break it through those ceilings currently on price action. You don't have anything even hinting at that at the minute. Even down here on the hourly, where every time you push towards this side, the bullish part of the momentum indicator here, it's when you're reaching highs on price action at resistance. It's failing every test that's put in front of it. It is in the top side of this downward sloping parallel channel, but that's the best you can see for it. Down at the early time frame then, downtrend and continuation, bearish divergence, top side, looks like it probably does keep going. 30-minute time frame, lots of volume here, hasn't actually made a significant difference, nor did it ever when it peaks at these areas to the trend. You do have a flash back up now, 30-minute time frame at 1730, and now you've got to be very cautious because price, if it does make it to that flash, hasn't managed to exceed these important horizontal levels of resistance. So despite the fact that you might not be in such a clear linear downtrend, anything around these areas or even at the top side of that diagonal, that would represent a lower high. So continuation of the downtrend makes it very difficult if you're looking for a short position, if you aren't patient. If you are looking for a long position, similar situation, 15-minute time frame, not going to get any spectacularly revealing information here, having already covered such strong structure on other time frames. So you've got your 4-hour interrupted flash, went through that a number of times. Don't think that's giving you much utility right now, but it does come in at the same place as a 50% retracement. So even if price action did get exceedingly bullish immediately, that would be topside targets again, 20 bucks, 19 bucks. This is the area to be aware of to the top side for trending moves that make it there. Congratulations if you're in, managing the risk on the entry with a stop that makes sense based on that target, with the structure of price action and this most recent trend giving you some tips. Now I want to check back on the fact request that came in from Delete a Sale. Hey Jamie, thanks for all, could you take a look at Burberry? This is what we're doing. Thanks very much for the fact request, would be much appreciated. Thanks very much for the fact request, my friend. Accumulating lately, 1-day flash at 1458, good spot, down to around 1390, potentially where you were thinking about your stop, makes sense. Idea is exiting positions at 25 and 26, 25 and 26. Makes sense too, it's very ambitious, but if you're in the trade following it with a stop, then that makes sense. That would be the place to look to. Inverted head and shoulders, downward sloping. You've got, higher time frames here. If it does go back against this trend, oops, don't need that. It does go back against this trend here. It's got very little to speak of in terms of resistance on the way down, other than the areas which will define it breaking it back up again. So I wouldn't worry too much because you can use that level at 1650. If your target is 25, then 1650, once it's proven not that it's got strength and can try higher than that level, it takes a lot of risk off the table for you on this trade. If you can manage a tight stop on a breakout, that's very good. The 25 target there is back above a golden pocket. Be looking for a 786, filling a gap, and also testing probably what is a fair value gap. Monthly time frame then, if it does break to the top side, yeah, 24, 25 potentially what you're looking at there. That would also be looking like an 886 of this guy. So, well, clearly it's 236, you're looking at it the other way around, Tradespotting, but if you are coming back from these lows onwards to this high, looking at that 236 there is similar to higher. I can see your golden pocket would match up there, and again, that would be good interest. But I'd still be very cautious of this 50% retrace. I mean, you got lots of different fibs on the top there. I'd still be very cautious of this 50% retrace, horizontal levels here. And looking left, you can see that there was this important area of price action. I'll just drop this on it, top side and bottom, to make the point that we're in, once price action breaks to the top side, this is the area that it's going to try and go through. This is the zone. Anywhere around here, it's less likely to find resistance than, say, at the point at which it broke out or returned into this formation or found resistance in advance of it, that's very much more likely to be the topside target in the short time. And it may well be that holding a trade from here, up around 21 to the 25, 26, the opportunity cost on that is far higher, and the time in the trade takes far longer than, say, the move that takes you here. So there's a cost benefit. The cost is that the risk is far greater that it'll continue down here. You can ameliorate the difference in the risk by using that stop though, make it the same. And then the benefit is that likely you get a faster move from these lows, a higher percentage of the total move. So this would be the half you'd want to be in. It's just, that's in terms of the move itself. Again, the risk is higher. The probability that the trade works out is higher up here, along with the fact that you would have started an uptrend, and therefore the risk clearly different, and you'd be back testing back above a 236, and then within this range where price action was ranging previously between important support and resistance levels, you'd be in search of resistance, and a 50% retracement against a prior low. It is very common if a touch of bullish divergence here on the weekly. If it doesn't push that much lower, does wick down to your targets, it's been very close already. If it does wick down to those targets and then move up again with that bullish divergence, it could be interesting. Two trades on the go. It's from the breakout move into this zone where price action ranges, or it's when it breaks the top side of that range at 21, taking it to 25. And they're kind of two different trades because of how much the risk profile changes at that horizontal level and around 20. Above 19, below 21, 90, 21, 30. That's sort of so very difficult to predict what price action will be doing above there until such times as we see what its behavior is like here. So asymmetrical internationalization has been a big boon for Burberry and other British brands. They do have an awful lot of inherent value. They've also got those flagship stores in an economy which might now be starting to pick up again. There's a lot of reasons why the chart was trending down. Now let's see if it starts trying to challenge that trend, how we can best take advantage of this opportunity. Thanks very much. Delete yourself for the facts. Just to end the show then, putting on the long position, detailing how those trades might work. It's either the deep retracement, likely holding the basis line of this channel. This is the way you're drawing it. We'd want your stop at a significant level beyond it, but we've got important horizontals to look to, and you'd be taking it probably, that's the 6 to 1, test the first horizontal, follow it in profit, but keep it tight when it reaches that level, and then targeting another potential entry should it break back above the diagonal and that horizontal at 21 and change. Maybe at that point you're taking it up, or sorry, at 17 change, you're taking it that up to the $21, $20, $22, maybe following a stop and profit. Any questions, or if that wasn't clear, just ask me. If I was going to put on a number of other trades, I'd say this low level where there is an area just beyond important flash, and if it doesn't hold, also important to think about your risk. There's similar take profit target on this guy, a deeper entry, that also might work. And if that doesn't, I'd very much be looking to hold a stop in that area, because the drop below could take you down $8. There's also the potential breakout trade to the top side. So this thing has got a lot of different ways that you could manage it. You'd want to be able to assess price action in advance before knowing where you're putting your stop. Clearly you'd want it beyond a pullback, and you'd want to be making that thing work. You could easily get the risk reward off the back of it as long as you've got an edge, and that gives you the probability that makes it worthwhile trying. Depending on your trading strategy, one of these trades will be better for you than the other. If you'd like to discover what that might be, or learn more about how to trade properly in a way that suits your personality, your appetite for risk, and improve your skills, then take my course, www.technicalanalysis.school. It's absolutely a great way to trade, proven to be effective and helping lots of people just like yourself achieve things that they didn't necessarily think possible before they embarked on this journey with us. So join the free side of Discord, get involved, send me a fact request if you'd like me to look at any particular company or any particular chart you're thinking of trading or investing in. I'll do my absolute best by you. If you like this video, hit the like button. And there's plenty more people like myself and Rocky on the Rocky Outcrop Discord. Thank you very much. Delete yourself. You're appreciated. Everybody else, be like that guy. Thank you very much. hit a like. See you in the next one, everybody. Hope you enjoyed the video.